Good morning. This is Larry McMillan with a stock market update on Tuesday, January 14th. Sorry we didn't get to this yesterday, but there's some other things going on. So the market's taking a turn for the negative. We've been sort of seeing it developing, but now it's closed below the 58.70 level for 2 days, actually three, I believe, but that's enough to remove the bullishness from the S&P chart. So we're no longer holding a core bullish position. We still do have a couple of things that are on buy signals and a few more that are on sell signals. So let's go over those. The S&P chart itself is, I would say, sort of a neutral to negative. Some people are describing the recent action over the last couple of months as forming a head and shoulders, which is a bearish formation. Now that we've broken down below 58.70 as bearish. And there is support at 57.80, which we bounced off of yesterday, but below that there's more support at 56.70, but we have a downtrend going on the S&P right now. So those support levels, while they might hold for the short term, are probably going to need to be tested several times. The equity-only put-call ratios are on sell signals. They're rising steadily. Put buying has been pretty heavy in the last few days. And so that's a negative sign. Brent also has turned quite negative in the last week, but especially the end of last week. And that drove the Brent oscillators back onto sell signals. They are in oversold territory, but no buy signals from that area yet. New highs versus new lows, very negative numbers there. Again, a bearish sell signal in that regard. Realized volatility is also bearish in that S&P, the historical volatility, the 20-day historical volatility of SPX has risen up to 17% now. It's in an uptrend. That's not good for stocks either. There was a little bit of positive action coming out of VIX, although it's limited. VIX has formed a spike peak buy signal. It actually formed two of them, but the second one was canceled out. And it's trying to actually form a third one. We don't trade these overlapping ones, just the first one, which is still in effect from December 19th. So that is the one of the buy signal that we still have in place. Countering that somewhat is that there's a trend of VIX sell signal. In other words, VIX is trending higher. That's not good for stocks. The construct of volatility derivatives, which describes the term structure of the VIX futures and the CBOE volatility indices, that fell into sort of a really tenuous state yesterday when the market was declining, but it's sort of recovered now a little bit. So it's one of the few modestly bullish indicators we still have. But the thing to look for there is if Jan VIX futures, which is the front month, should rise in price above Feb VIX futures, then we could have a real problem on our hands. So overall, we're seeing mostly negative indicators now, and we are trading those in our daily letters and in the Option Strategist, which is a weekly letter. I invite you to visit our website to further investigate those letters. And meanwhile, have a great week trading.